Welcome to the Captain's Blog. I am David McDonough, Senior Vice President and founder of Flagship Wealth powered by Trilogy. On this blog, we try to take what's unnecessarily complicated out there in Wall Street and make it understandable to you on Main Street. We went into the end of last week just 2% off an all-time high, 20% off the low we just saw at the beginning of April. Then obviously the conflict going on between Israel and Iran, which started the Friday morning, had the market in panic mode, gave back 1%. Did that continue? Did the negativity continue? Or did the calming of the crisis, did the crisis expand? And also we had to pay attention to the Fed. Did they rain on the positivity parade? Here's your week in review. So at the beginning of the week, we have what we'd like to call a relief rally. Oil prices down. At that point, the crisis didn't spread. And news about you out there in Main Street, retail sales below expectations. Is that surprising to anybody? With the uncertainty out there, you're less apt to spend. And then the Fed this week, came out and said they're going to keep interest rates steady. They're more concerned about inflation than they are about you out there in the labor market. Again, we continue to believe that they will lower interest rates twice this year, which again puts more money in your pocket. And then the president came out and said, evacuate Tehran. The market sold off on that news. Do we get drawn into this conflict? As of this morning, as of Friday, again, the market continues to trade on fundamentals and not on these headlines. We're flat for the week. And here's what to look for next week. Obviously, it's all going to be about geopolitical risk. Today, Friday, we know that Iran is meeting with the European counterparts. We don't expect anything to happen, with our president saying that there's a 2-week notice where it comes to negotiating. Also, inflation numbers next week. And what we have seen where it comes to inflation is this, folks. Over the last 4 months, it's come in below expectations. So again, to reiterate, the Fed will be there, in my opinion, where it comes to cutting interest rates if this economy starts to slow down. Now, here's your personal finance tip of the week. So the avid viewers of this blog know that I talk almost each and every week about having a collection of investments. Investments in different 401ks and IRAs. Dave, I have no idea even how it's invested, where it's invested, or who the beneficiaries are. I know this seems like Groundhog Day.
From Punxsutawney, it's Phil Connors. So long.
That I say this each and every week, but it is important. With the market trading at near an all-time high, it makes sense to take control of these portfolios. Make sure they're all invested the same. Consolidate it. Again, do so before the market takes it from you. Look at your statements in the middle of April, down 20%. Now it's back to almost even. Now is the time to look at your risk tolerance, your time horizon, and take an active approach to your portfolios. So thanks again for checking in. We'll see you next week on the Captain's Blog. Captain, out. That was for you, Jeff.